Nilesh, there's a lot of people who say that, this time if the finance minister needs to do something, it is actually at the bottom of the end of the pyramid. I mean, towards rural India, towards India's health infrastructure, towards MSMEs, because that's the part which has been hurting. And while there is some tenuous link to demand from corporate demand from that aspect, generally this is not the area which the corporate sector or the stock market is very focused on. Would you agree with that? That this time's budget is probably more about not the top end of India's economy, but the bottom end?
Undoubtedly, Udayan. Today, trade, agriculture, private sector investment, and government spending is above pre-pandemic. But unfortunately and sadly, consumption is below pre-pandemic. And as you correctly mentioned, it is the bottom end of the pyramid which is being hurt maximum. We are selling more SUVs than pre-pandemic, but we are selling less entry-level bikes. Clearly, government needs to step up to support consumption at the bottom of the pyramid. They did excellent job with a credit guarantee scheme of 3 lakh crore for MSMEs. But MSME cannot survive only on fixed income or debt. They need equity. How do we mobilize equity for them? How do we create reskilling of MSME entrepreneurs so that they can move from unproductive or uncompetitive, whether it's old economy or new economy, into more competitive scenario? And most importantly, can we even think of urban Manrega? In urban India, also there is a higher level of unemployment at the bottom end of the pyramid. We have seen rural Manrega or Manrega giving rural employment. Probably there is a need for that in urban India also. So this time budget has to not only support growth, but also equitable distribution.
Mm. Rashesh, how important is all this for the purposes of the stock market or even corporate India? Because, I mean, we've seen the corporate numbers over the last 4 quarters. I mean, they seem to be on a tear. And while we are talking about this misfortunes of the MSME segment or rural India, the corporate India or the big companies seem to be actually reveling in it. They're grabbing more market share from these unorganized players, and their profit pool and their revenue pool is only growing. But is there a point where the bottom end of the pyramid actually begins to bite this kind of demand growth that we are seeing? I mean, that's the key point at which the corporate sector will notice that no, we cannot continue to grow with 50% or 60% of India hurting so much.
Absolutely. I think as you very correctly said, I think the stock market is a very small part and a small barometer of the overall Indian economy as a whole. And though I think what has happened last 2 years, the RBI policies on liquidity as all over the world, all the central banks, I've always seen that any intervention by a central bank, any intervention through the monetary policy helps the formal sector and the larger corporates immediately, because that's immediate. And that is why I always say we need to balance the monetary policy with the fiscal policy. The fiscal policy, what the government does actually addresses the lower half of the economy, while what RBI does addresses the upper half of the economy. So I think the last 2 years, as all these central banks have loosened the purse strings, brought down interest rate, infused liquidity, the formal sector, the larger corporates, the larger companies have done well. And that was a good thing because it kept at least the economic wheels going. But we clearly see that consumption is slowing down in India. And as you know, consumption has been the key driver of India. So unless we revive consumption, and for that, the fiscal policies matter a lot more than monetary policy. Monetary policy works when there is a crisis like what we had in the last couple of years. But I think to revive growth and demand and eventually the capex cycle, because ultimately the corporates also will follow the consumption cycle. So we do think that the fiscal policy intervention is going to be the most important indication government can give. And it is time that government starts spending. If you look at the fiscal stimulus or so-called stimulus we have had in the last couple of years, they were also indirectly through credit guarantees and stuff like that, which all affects the formal sector. I think the direct spending by the government, there have been a few programs, but I think government needs to spend at least about 3 to 4 lakh crore putting money directly in the hands of people, which will start the consumption and the demand cycle, and that will fuel this current optimism, because this current optimism is partly based on liquidity and the monetary policy, but also partly based on expectations of growth. So if there is no consumption growth, then growth will start petering out, and that will affect all investors across the